Guess what time it is? Time for my Emerald Coast monthly real estate review for April 2024. Thanks for joining me today. My name is Carrie Lindsay with Bricks Realty, managing broker. Let's dive in. The first thing that I want to talk about today is to give a high-level update on the recent National Association of Realtors Commission settlement lawsuit. Preliminary approval was received yesterday, 4/23, with final approval expected late November this year. And so what does that mean to you as a buyer and seller? There are three important things to note that are coming out of this lawsuit. Beginning in July this year, number one, buyer agent commission will no longer be published on the MLS. Number two, offering an offer of compensation is no longer required in the MLS. But I want to note here that commissions have always been negotiable between buyers and sellers and their agents, and they have never been set by law. Sellers and listing agents can still offer a buyer agent commission as done today. It just cannot be on the MLS. Buyers will be required to sign a buyer broker agreement up front with a realtor before touring any homes where agent commissions will be determined in that agreement. Beginning in July, what this means for buyers is that they are on the hook to pay their own realtor commissions unless the seller or the listing agent is offering a buyer agent commission, or unless the seller would agree to a seller concession in the contract to pay the buyer's agent commission. There is still a lot being worked out behind the scenes and a lot of details that we need to get answered before we get to July. But this is dramatically different of how we do business today. I will keep you posted as I find out information. And again, if you have any questions in the meantime, please reach out. I would be happy to chat. Okay, now let's talk Florida housing real estate market updates. Rates. What is going on with interest rates? Mortgage rates have kept climbing on the string of market moving news. Notably, Federal Reserve Chair Jerome Powell said last week at the Washington Forum that there will be no rate cuts anytime soon because the strength of the U.S. economy is just too good. Remember, back last month at the Fed meeting, they kept the Fed funds rate unchanged, hovering around 5.25% to 5.5%. And the Fed said that it would be keeping an eye on economic developments. Mortgage rates are influenced by many elements. The Fed funds rate, which we just discussed, the inflation rate, job creation, and growth or shrinkage in the market. Housing Wire's Mortgage Rate Center showed that the average 30-year fixed rate mortgage on Tuesday was up from 7.26 to 7.48 from a week ago. And the same time a year ago, the 30-year fixed was at 6.54%. Expectations from experts are that rate cuts could begin as early as June. Forbes believes the rate cuts will start sometime between June and September of this year. So with all of that in mind, what are experts projecting for the rest of the year? Well, the averages show that for quarter two, which we just started, is going to be around 6.63. Quarter three should be an average around 6.4, and quarter four of this year should somewhere end around 6.2%. Right now, we have a weak buyer demand rate environment. So as rates go down, that means mortgage payments will be lower and thus more affordable. We should see demand rise. And if demand rises going forward from buyers, where is our inventory? Well, our national average inventory of growth right now is at 23.5%. And here in Florida, it's up greater than 45% year over year. This means that for many households with record high equity, waiting out the potentially lower rates later this year is maybe just not worth it. Doug Duncan, Senior Vice President at Fannie Mae, says consumer attitudes towards home selling conditions has increased, expressing that now is a good time to sell. The available inventory of unsold homes on the market is building quickly due to the most recent mortgage rate jumps that we just talked about. The good news in the increase in inventory is buyers are seeing more choices on the market, which we're hoping should spur sales this spring. Despite the recent supply increases, competition remains strong for attractive, well-priced listings. What does that mean for affordability? How affordable is it right now to buy? As the median home price of a Florida home just achieved an all-time high in March, combined with higher rates and rising home insurance costs, some buyers are now becoming more challenged with overall home affordability. That is something that buyers are struggling with. We continue to see more reductions in listing prices, more contributions towards buyer closing costs, or offers to help buyers buy down their interest rate. Florida's new construction market is also experiencing a little bit of a pullback in customer demand with the now higher interest rates. And as such, a lot of the national home builders are now offering buyers who opt in to use their local in-house lenders a more attractive rate as credits, as well as credits to buyers to help buy down their rate. Across the nation, the same picture is true. Homes are less affordable now, going all the way back to 1990. They are less affordable now than they've been in the last 3 decades. As we've discussed in the past, 3 things affect home affordability: wages, mortgage rates, and home prices. Wages, according to the latest government numbers, are climbing at a faster pace than they have in the past. Mortgage rates, as we've just discussed, are expected to be in a downward trend. So that leaves prices. Where are we with prices? Prices are only expected to gain 3 to 5% appreciation this year, which is also good news. Appreciation nationally, we're setting at around 3.8% based on the average sale price year over year. So with all this in mind, where are we in Florida? What about our local market data? What does that show? Well, it really shows what we've just covered. The average sale price of a home is down a bit in the Destin market, 2.9% year over year, and up in the Pensacola market at 4.9% year over year. This can be heavily dependent on where you live in the Panhandle, but it seems like that both the Destin MSA and the Pensacola MSA are stabilizing, which is good news. Closed sales year over year down 23% in Destin and down 20% in the Pensacola area. Days on market from the time you go list a home until you go under contract, 54% increase in Destin from 33 days to 51 days, and up 44% in Pensacola from 36 days to 52 days. New listings up 14% in Destin to 955 listings, and up 9% in Pensacola to 986 listings. This tells me that there are still some sellers that are holding on to their low interest rates and just don't want to sell. And these numbers, even though they're better than they have been, are still not near as good as our pre-pandemic active listings. Our active inventory is up 46% in Destin and 38% in the Pensacola area. I believe that homes are sitting on the market longer strictly because of the higher interest rates. Months of inventory up 76% from 3 months to 5 months in Destin, and 65% from 2 months to 3.3 months in Pensacola. So here are my final thoughts as we wrap up today. Again, I've said it several times, but we are in a rate-sensitive environment, not here just in Florida, but across the country. But I do feel like things are improving and headed in the right direction. As we go forward through the year, I expect us to see more realistically priced and well-marketed homes sell, and buyers to be more discerning with most likely their largest financial purchase. It is still a challenging time and not as affordable to buy a home as it was a couple of years ago, but we are moving in the right direction. Over the past 3 years, Florida has experienced record lows in active listings that have been available. And when you couple that with the increased demand over that same time period, that has led to extreme increases in housing costs. In the past 2 years, Florida has experienced unprecedented population growth. That, coupled with historically low interest rates, have led to housing sales way outside the norm. With the context of this rapid population growth and low interest rates, the current decline in sales in our market does not point to a housing market in crisis. It really is probably just previously high levels of housing sales that are now unsustainable. If you look at the big picture, Florida's active listings have yet to return to pre-pandemic levels, although we are getting close. So restocking our inventory of housing is likely a really good thing for our Florida market. Overall, we are seeing a healthy rebalancing of our Florida housing market and a return to a more stable and sustainable place. And that is all really good news. I would still like to say that the long-term benefit of home ownership is generally going to outweigh the pain of the process to get there. Home equity long-term can never be underestimated. Pay your own mortgage, not your landlord's. I hope you found this valuable today. If you have any questions, want to talk about this further, please reach out and give me a call. My number is 913-638-7767. You can DM me, you can comment below, and I will respond. But I'd love to provide as much information as I can to be your local expert so that you can have the knowledge to make an informed decision. Again, I hope you found this helpful. We'll talk again next month. Have a great day.